Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update for the week ending Sunday, February 16th, 2025. I titled this one, New Highs into the Holiday Weekend, What Happens Next? And I think that's a legitimate question. Do we go higher? Is this a bull trap? It's not broad-based. We'll see that not every market is reaching new highs, but there's some cool things happening underneath. Email address is htscidoc@gmail.com. Either if you're new to my channel, hit the subscribe, hit the alarm so you get notified when I do these. If you like what I'm saying, hit the thumbs up. If not, the thumbs down. Hopefully not too many thumbs down. And then if you have comments, put them in the remarks or email me at htscidoc@gmail.com. I got a lot of emails. I answer them all. So the session is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And as you'll see, I have tools in multiple platforms. I'll use a number of them during this video. I do one, sometimes two live in-person events. Why would you go to a live person event in 2025 with Zoom and GoToMeeting and all that? Because of networking. I think you get much more out of live meetings. I like getting there with the people that I teach, and I think there's benefit from both the speaker and the attendee. We do one in Orange County. It'll be June 6th through the 8th at the Fairfield Inn and Suites in Tustin, Orange County. Greg Mills at gam7205@aol.com. I can't believe somebody actually still uses an AOL email address, is the contact person. Typically, there'll be 4 to 6 speakers. I usually speak about 40 to 50% of the time. It used to be one of my buddies who's no longer with us, George Lee's meeting, and we wanted to keep it going, and we sort of resuscitated it after we lost him. It's designed to be inexpensive, and I don't want to give a price because I'm not Greg, but it typically ranges from $300 to $500, and it's limited in space for in the room, and if and when we fill the room, we consider opening it up for internet, but that adds a complication, and it's no guarantee that we'll do that. Now, I mentioned I'm in multiple platforms. HGSI really is not my stuff, but my mentor, Ian Woodward, is all over that platform from the perspective of his teachings. I was involved with 4 or 5 other people in developing one of the indicators I use today called the Bongo, which was popularized in HGSI. So much, if not everything that I do here can still be done. Now, HGSI is still on my computer, and I still use it. Wealth charts, Rob Hoffman was gracious enough to build some of my stuff in as standard and then create a marketplace package, which has a great end-of-day scanner. I built my timing model there. Could use perhaps more market breadth tools, but I think it's really, especially for short-term traders, is great. You can buy my package there without subscribing to wealth charts. They have, I think, called a starter or a foundation. But why would you? I mean, the wealth charts, the rest of wealth charts is so powerful for what you pay. TradeStation, one of the more popular trading platforms. Everything I have can be purchased there, from indicators to scanners. Timing model can be built. Great breadth tools. Now, the thing about TradeStation, everything's got a quirk. Their radar screen is one of my favorite tools, but it's limited in how many symbols. The scanner's great, but it doesn't treat the current bar to end of day to the market close. So one of the reasons why I did the Market MRI Pro app was to get around those limitations. TradingView, the scanner is improving, but we're not in the scanner yet. But you can purchase a package that has everything that I do in it, including market timing and breadth. And then just to make my life simple, I'm in the process of building out my app in Metastock. Why? Because it's got a huge user base, international user base. It's a great charting platform, one of the best charting platforms. And it has, especially if you use Sagar's Q tools, some of the best market breadth tools. And then because I wanted to simplify my life and put everything I could into one platform, we just went to beta on Market MRI Pro, and I anticipate launching it to the market in March. Basically, I'll use a lot of it today so you can see kind of the power of that. Which is my favorite, as I said before, and I'll say again, which is my favorite grandchild. You'll never know because I love them all. Now, speaking of grandchildren, you want to weigh to my heart as you put on your Michigan cheerleader outfit and she gets whatever she wants, but I'm blessed with two great grandchildren. I have things that are important to me. My wife is important to me. Michigan football, basketball, very important to me, my alma mater. And I live in South Florida. If you live in South Florida, you got to have a boat. And this is my boat. It's a 56-foot Riva Revell. And I named it Stocks and Docks, shocker. And, as much as I can, I like to go out with my wife and friends. And, if I'm going to do that, the days of spending hours and hours and hours of looking at charts as I get closer to retiring from my day job needs to be replaced with something I can do much quicker. And that's sort of the intent of that Market MRI Pro app. I'm still dedicated to wealth charts, no question about it. That's why I put it on my list. And I do a Stocks and Docks video most days when I'm not traveling. There's only so many I can do. And when I'm on the road, it's hard to really give it enough focus to really give you something of value. But stocksanddocks.com, yes, it's the same name as my boat. Now, I used to have a small email list of friends and family, and I would invite them to special events. We just did a crazy 3.5-hour seminar, and I got tired of all the bounces and being considered spam. So I've gone to a Google group. It's called Top Down Trader. There's no cost. I don't use it for solicitation. You will get notified when I'm doing live sessions. You'll get discounts on my software. And if you join the Google group and you want that 3-hour live seminar of how I use the various tools and some of my decision making around options, I'm very directional in trading, and I like to use options to generate new positions and then potentially turn them into stocks if they go up and create some profit. But we talk about that in the video. Start off with the major markets. There's some things here that really floored me. Growth is back. Look at the IBD 50. Small cap growth was up 7%. And the ARK Innovation ETF, which has Tesla in it and then a bunch of small cap growth, was up 6.8. A lot of that on probably was Tesla on Friday. It was a strong week. Qs were up 2.9. The composite was up 2.5. The equal weights were up 2.1. Mag 7 was up 2.3. The S&P 500 was up 1.5. The Dow was up 0.6. And then the broad NYSE 0.5, and the Russell was flat. So you'll see in some of my charts that especially on Thursday and Friday, you had separation of the NASDAQ and the S&P 500 away from the small, mids, and the Dow. If you look here, you could see that the IBD 50 and the ARKs, not all-time high, but 52-week highs are right at it. FANGs were up 3% at the 52-week high. The Qs at the 52-week high. NASDAQ a little bit below, but I think it hit it during the day. S&P at a 52-week high. The Dow is within 1.3% of a 52-week high, and the NYSE is within 1% of a 52-week high. We have had a heck of a run in this market. If we look at the sectors, technology-led, a lot of Apple and NVIDIA, I think, drove things on Friday. You look at communications, we're up 2.5, materials 1.8, and the laggard on the week were healthcare and financials. This is from Sagar. It's his Q Edge tool. It's one of my heads-up displays. And what he's looking at is percent of stocks above the midline of their Bollinger Bands. This is kind of a little bit bearish, a little bit less than 50-50. And then how many sectors were up on Friday, how many industry groups, and how many stocks. Why is this tool helpful? It's helpful intraday. It's helpful intraday because it gives you a sense of if the markets are up and the internals are bad, it's not a great sign that the market's going to go higher. On the other hand, I'll have plenty of days when the markets are down a lot, especially with one of these gap down days. And then the markets start to rotate higher, and you see it first by the underneath, the breadth that you see there. This here is the buckets. It gives me a sense of within the Bollinger Bands, where are the stocks sitting, and we'll come back to that later. And then down here you have the sectors, 1 day, 2 day, 5, 10, and a month, and really sectors, industry, and stocks. And you could see that it's been an okay, and the markets have gone up. The breadth, it's not been perfect the whole time, but the market has been going higher. This is another one of Sagar's tools, and it incorporates a lot of things that I used to use in HTSI, and I really like it. I'll just call out a couple of things here that are important to me. This blue line here is a 3-month new high, new low. This chart you'd have to know is a combination of the NASDAQ and the NYSE. And when we get up to the higher levels of the 3-month new high, new low, we typically see the market start to pull back. When we get down to this level here, we typically get to a bottom. So we're neutral on the NYSE and the NASDAQ combined. This magenta line shows me growth versus value, since it's in the upper part that says growth is leading. And this is small versus large cap, and it tells me that this is large cap. So large cap growth on the week outperformed despite that 50, which is kind of interesting. If we look at the NASDAQ on the left, the NYSE on the right, you could see that the 3-month is not giving us a signal. We can see that there were 2 Hindenburgs in the last 1, 2, 3, 4, 5, 6 trading days, and they were on the NASDAQ. If we look at the various indices, you could see that the NASDAQ 100 bounced into the very overbought range on the 3-month, so that's something to watch. If we look here at my weekly timing model, and this thing is just pissing me off, to be honest. I have to follow my model. That model cages my level of conviction. On the weekly chart, I've got 2 sells, these are the small lines here, and 2 buys. What kills me is we barely went to a sell. To change direction, you have to close below the WMA on the weekly bar, and the weekly bongo has to go to red. Now, I also think we're near a top, so I may be sitting here later saying that that signal was not a bad signal. But we barely, by about 60, 70 cents, got to a sell signal there. I look at the weekly, Q's at all-time highs, the S&P's at all-time highs, the Dow right off all-time highs. I call this neutral to bullish, especially even though it's 2-2. I'm a little bit less bearish because of what happened with the spider. On the dailies, I'm bullish 3-1. The one that's lagging is the Russell. And you could probably see that in the markets. And you could see up against all-time highs on the Qs. Probably all-time high was hit on Friday, although it closed below that. Not sure if we're right at all-time closing highs on Thursday. So this has been a super strong market. And despite all the noise, the rates, the craziness with the new administration, the tariffs, markets like to climb a wall of worry, and they're climbing. When do they stop is the question. Another thing that I built into Market MRI Pro, besides the timing model to make it easy, is a heads-up display that combines a lot of my favorite tools. Up here are looking at daily performance. You can see on Friday the Qs led 0.42, the Russell was down 0.08, the spiders were flat, the VIX was down, and the diamonds led to the downside, down 0.33. If we look over here, we could see on Friday the new high, new lows at various time frames on the NASDAQ, NYSE turned positive. That's good. Down here, I can see communications, energy bounced. Looking at one-day change, tech, financials, and discretionary were up, and the thing leading to the downside was healthcare. And we could see themes here such as China, solar, digital health, biotech are things that were moving to the upside. And just what I wanted to do is to be able to glance at this during the day. We used to have it updating real time. Now you just hit refresh. It takes a second to refresh it. And with real time data, just no reason to stream it. It's expensive also. And it gives you a sense of where to go focusing intraday. Now remember that tool in QEdge that looked at the S&P 1500. I broadened it to include the NASDAQ and the NYSE. In blue would be Friday versus Thursday. You can see the number of positive sectors was down. Industry groups was down. Advances were only 44%, and we're 43% above the midline of the Bollinger Band. That's not very bullish. The NASDAQ, 54 sectors versus 100. 51 industries percent versus 75. Only 48% of the stocks were positive and 47% above the Bollinger Band, the midline of the Bollinger Band. And the same thing on the NYSE. 17% of sectors up, 43 of industries, 46 of advancing stocks, and 49 above the midline. So this is not a very bullish picture, despite the fact it was a decent week. So it just tells me that the broader markets were lagging. If I look at a 5-day return, the Q's led with 0.42. Actually, we're not looking there. We're looking over at the 5-day. Q's at 2.92, Spiders at 1.49, Diamonds at 0.6, and relatively flat on the Russell and the VIX. And then the same thing here over 5-day change. Everything was up except for healthcare, and the big leader was tech communications. These and these are daily, don't change. And all I did was I sorted on the 5-day change. You can look at 20 days, look out about a month, 50 days, look out a couple of months, and you get a sense. The other thing that I like to look at during the day is the closing range, because you want to see things be in the higher part of their closing range. Now, it was an interesting week. The CPI was hot. PPI I thought was hot too, but they kind of ignored it. And we had the issue of reciprocal tariffs. Yet the 10-year was down 0.15, and the 30-year was up 0.03. So kind of nothing burger on the rates, despite all kinds of news. And that's kind of interesting. Now, if you listen to too much TV, you're going to get the impression markets cannot go up in a high-rate environment. I bought my first house in this is going to date me, 85, and I paid 13.5% interest rate, and we had a decent economy. It was just, they're just trying to slow down inflation. Well, what I did here is I took the 10-year, and I said, this kind of looks like the beginning of this. And then this is the spider. And what I wanted to show you is that rates can get higher and markets continue to get higher as well. Now, if you're careful and you look down here, you can see it ended in 2007 and 8. So obviously we don't want another big financial crisis in this country. But just because the rates have come off a very unusual and non-traditional rate-free environment does not mean the markets can't go up as the rates rise. Is there a recession in our near future? I don't like to ignore history. History says on the 10-3 month, 10-2 year, that once you go from an inversion to cross back to normalization, you see a gray bar. That gray bar does not occur immediately. That gray bar indicates a recession. Do you see any of these crosses in the last 20, 30, or 40 years that were not followed by a gray bar? I think the answer is no. So I know the worst thing anybody can say is maybe it's different this time. So I'm still thinking we have a recession. But when? If we look at the Fed Diffusion Index as a measurement of manufacturing, at least the one from January was a big positive surprise. We'll see what the February release, which is coming out in less than a week. And then we're not seeing any evidence of credit tightness, something else that you would expect to see in the setting of a recession. Breadth was mixed. You could see stocks above the 200 up a little bit, stocks above the 40 up a little bit, the 13-week new high, new low applied to the general market, not extended. So yeah, it's not bad breadth, but it's certainly not rip-roaring overbought market. The buckets, now, again, something we learned from Ian. I love how it was incorporated, it has been incorporated by Sagar. But one thing I learned over time is not all markets behave the same, although they all look the same in here. So I have the NYSE, the NASDAQ, the Russell, and the S&P 1500. Similar to the prior view, you have to actually hit refresh if you want to update it. I don't stream it. It seemed like it was a waste of resource. Not a waste of resource to look at the buckets. They just don't change that frequently. So I look over at the left, and I don't have a ton of stocks below. I don't have a ton of stocks above. I see most of the stocks are below the midline. Didn't really learn anything. Everything looks about the same. It doesn't stay that way. Hindenburg, omens. Old wives' tale, perhaps. There's not been a major market correction since the Great Depression that was not preceded by firing of Hindenburg omens. Typically, the Hindenburgs are fired on the NYSE Common. I've done my own study, and I think they're meaningful on the NASDAQ as well, especially when you think about what makes up one versus the other. So I heed the Hindys when you see them, and we got active Hindys on both. Now, right now, the new lows have not started to expand. 1 out of 4 confirmed Hindys, and we have confirmed Hindys on both, will be meaningful. The other 3, you usually don't get a rip-roaring bull market in the setting of a Hindenburg omen. I'll just leave it at that. Know your news and earnings. On the left-hand side, you see a bunch of arrows that say we got a lot of Fed heads speaking. And we got the Fed minutes coming out at 2 o'clock on Wednesday. And I think we're all wondering what the Fed's mindset is about not only are we not going to have cuts, are there any talk about hikes? I don't think we'll hear anything about that. We got some home building, housing starts, building permits. We've got jobless claims. We got that Philadelphia Fed manufacturing update, leading economic indicators, PMIs, sentiment, home sales, a bunch of things on the news. So certainly at least a medium news week. And on the right, we still got a lot of earnings left, although some of the big guys are done. Some of the really big things. And if you've been paying attention, I know you are because you wouldn't be watching me if you weren't paying attention to the market. I think we've seen a really fascinating market here. And if you have good earnings, you've been rewarded. But if you come in below whispers or below expectations, look out below. It's been you win or you lose. You can make a big move. Lastly, before I go into the charts, usually I spend 20 minutes or so on the front part. Equities were up, market cap weighted S&P 500, so the large caps led, mega caps leading. Netflix is on fire, Meta is unbelievable. We had the falling dollar and rates despite lots of economic data, tariff discussions, some Powell testimony. Now we go into a long weekend at or near 52-week highs of the NASDAQ composite. Qs, spiders, arcs, fangs, 50. Wow. Momentum seems to want to go higher, but the risk seems to be rising. You know, it's interesting that I saw a few things this weekend about how Buffett has unloaded a lot of things, including his ETFs for the S&P 500, as well as a lot of banking stocks. Now, he is probably considered as maybe one of the world's best traders, but it doesn't necessarily have to be timing it right. He might be doing this early. We don't know that. So I looked at over 1,000 stocks, despite the fact that one of my sources of scans, Market Surge, was not doing what it's supposed to do this weekend. And you probably hear that from a lot of folks on YouTube and people that like to use their scanner. I looked at lots of long and short setups. I remain mostly long with some cash. Now, I started to be careful. I have my largest position, like probably everybody who listens to me, is NVIDIA. I've in NVIDIA from a long time ago. And the reason it's my largest position is not because I bought a lot of it. It's because it's just gone up and up and up and up and up. So I had made a decision if I captured another pop, I was going to sell some way out of the money calls and buy some puts because if this market rolls over, everything else went to zero, I think I can use the NVIDIA to live the rest of my life if it doesn't go to zero as well. So it wasn't as expensive because I waited for it to pop, and I'll sleep easier. And my out of the money calls, if I get called away there, I'll survive, and I can always buy them back. And frankly, what I usually do in this scenario is I wait for NVIDIA to sell off, and then I'll buy back my calls at a much lower cost. And then I'll be left with put coverage at a place that I can live with, and I'll let it ride. So we'll see. All right, on to the charts. Again, just to remind you, daily videos, and those are almost uniformly just wealth charts. I do that for part of the wealth charts family. Again, so appreciative that my stuff is in there. It's a great tool. And like I said, why buy just my set when you can get the whole wealth charts package and so many other scanners? The Google group I already mentioned. If you join it and you want that long video, just tell me. I'll send you that in the slides, but only through Top Down Trader. And then depending upon how my day job goes, I'm a healthcare tech executive. I run a pop health group, and I'm the chief medical officer of a company that I founded with 3,500 employees. So to put it mildly, I'm busy, and we have 2 big meetings at the end of the year. So it's sort of made it difficult, but I try and do a meeting in early December, and I'm going to try and do it this year. Unlike the California meeting, that's not designed to be low cost. It's designed to be much more upscale, and typically it's about $1,500, but you're there for 3 days, and I don't think you touch your wallet. Well, not for food at least. All right, let's go take a look at the market. So I want to go first into wealth charts and look at a couple of things. First thing I want to look at is seasonality. I use a lot of different seasonality tools. I've got an app in TradeStation. It's built in to indicators in Thinkorswim. I've got seasonalitytrader.com, which is the old Magenta Trader. But there's something really nice about wealth charts, and that it's built in. So NVIDIA, for example, I just put the NASDAQ 100. I'm looking for the bullish sort, looking at 1 week seasonality, have to have 10 years worth of data, and my time frame, I'm a swing trader. So NVIDIA, which is something, as I just mentioned, I have, is only up 6 out of the next 10 years, 6 out of the 10, with an average return of 7.14, but that's looking out over February 12th to March 18th. Look what we get here for the next couple of weeks. We're at a sweet spot for NVIDIA, and it shows a projected 1 week change of 4.13%. Now, is that a reason to buy something? No, but it makes me feel pretty good about my NVIDIA position. And oh, by the way, if I get called away at $180, which is where those calls are, how unhappy am I going to be? Not at all. That means my position went up another $40. We'll see. That would aspirational if that happens. But you could see a lot of these NASDAQ 100 stocks have positive seasonality over the next week or so. But then you see down here, they're 6 and 4. Now, if I look at the major market ETFs, and actually they added so many things here. Well, okay. You could see bullish, natural gas, oil, gold, and let's go out 4 weeks. So I think you're going to see it changed. When we look out 4 weeks of seasonality, the leaders of volatility, UVXY, so that's not something that usually does well, and I guess that's this spike here and here that we're seeing. But over the next 4 weeks, those are not the major indices. In fact, if you look out over a 4 week period of time, we've got the Russell, the Spiders, and the Qs. So the Qs over the next 4 weeks are projected to be down 1.31, and you see that pullback in seasonality. The Spiders are projected to be down 2%, and you see that pullback. And then the Russell is projected to be down 3.68% over the next 4 weeks. And there's a pullback, and there's a pullback here. Now, does that impact on what I'm going to do? It will. It makes me a little bit more concerned about the short-term movement in the market. That's enough said about that. Let's look at the indices. And I'm going to look at, hold on one second. Oh, my problem is I got so many different computers, I can't remember. Do I hit? No, I don't hit that. Let's see. Oh, I'm supposed to be able to do that. Rise. There you go. I couldn't remember if it was F10 or F11. So let's look at the S&P 500. So Friday last week, and we were in a cycle where we had Friday down, Monday down, Friday down, Monday down. And over the weekend, we heard that we're going to get more tariffs, the reciprocal variety. And then as the market opened up Monday, I think some of that wasted away as it became delayed, and maybe reciprocal isn't such a bad thing. So Monday, we broke the down Friday, down Monday cycle with a gap up, and then we went sideways. Tuesday, we had the CPI, and frankly, it looked a lot worse. Actually, Tuesday was not the CPI. Tuesday, I think, was the tariff conversation. The market sold off, and then it recovered. Wednesday was the CPI, which was determined to be hot. The market fell, but if you didn't get stopped out of all your positions, you got back to the midline. Thursday, PPI was pretty much ignored. We went up the entire session. Friday, we traded higher and then went sideways. This is where we closed the prior week, super strong week. Now watch what's interesting. I'm going to overlay on this the rest of the major indices. Here we see that the NASDAQ did just as well as the S&P, but down here we've got a constellation of the Dow, the Russell, and the mid-caps that underperformed. So not everything went up. If you remember, you go back to Sagar's tool, large cap and growth. Well, this certainly is telling me large cap and growth. Now, I'm going to jump into TradeStation because when I look at the indices, there's something in TradeStation that really excites me, and that is Sagar's Q memory, so I don't have to do all my trend lines by myself. So let's go into the daily markets and look at what happened on Friday. You know, Friday was not a great day. Spiders opened up. You can see a topping tail. So really a nothing day on the spiders on Friday, really a flat day, down just a few pennies. They are riding this trend line up, and let's see if we can figure out where all-time high territory is on the spiders. So let's see if I can try to move that. Let's kill that. All right, let's try that again. You have to, beyond the candle, you want to identify. So let's hit the horizontal. One problem with too many platforms is I have too many platforms. So we are right up at double top land, and you've got multiple trend lines underneath. You got a 50. My bet is we break through that and go higher, but that's just one of the hypotheses. I got to have a high, low, and a middle scenario. The high scenarios we break on through. Why? We're coming out of a squeeze, breakout momentum, everything looks good, we're going higher. But we could pull back to the bottom line here, the green line here, or here, and nothing is broken down. We also got the 50 right underneath. So high road scenario is we break through. The middle road is we pull back to this trend line, which we've touched multiple times. And the low road scenario is we come down into the 580 range. That would be about 4% from here, so that's not even that low. The 200 is at 566. That is at 37. No. I used to be up at $43.11. That's about 7% away. Not out of the question. So my guess is we go higher, but we'll wait and see. The Qs. Qs were the strength on Friday. You could see they're up another 0.41%. And let's drop our little new high thing here. And you could see The Qs are right up against all-time highs, a very similar story as the spiders with a new indicator that is not in well charts called the CPR underneath. It's another of my crossover indicators that I use. And you can see the 50 is below. If we look at the diamonds, let's blow this one up. Let's put the high thing. Let's just touch this. The diamonds are still below their all-time highs. Now they're different because they've actually broken below the support. They've got resistance under above. They got the 50 here, which is 2% away. Nothing crazy to go down to that. You've got the support here, which is about 6% away, and then you got the 200 below that. This one looks different because I'm not even going to put on the Russell an all-time high, which is back here, way off of it, and it's in a wedge. Which way is it going to break? All these could resolve to the upside, and we could be happy, 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 but we're not without risk. If we look, let's just go into the futures for a second, and if we look at the futures, we could see the VIX is just bouncing around support. And one thing that certainly propelled the market this week is probably the US dollar, which fell. If we look at, and here's UUP breaking through support. If I look at commodities, dollar's weak. Isn't it interesting that both gold and silver sold off, even though the dollar was weak? Oil is down. Natural gas is doing another try to break out. And then both the 10-year and the 30-year on Friday were down. Now, if I change that to a weekly chart, just out of curiosity, you could see that it kind of looks like the 10-year and the 30-year want to go higher, doesn't it? And it kind of looks like gas wants to go higher. We'll have to see. Was that a one-day wonder relief? But look at where they're sitting. You got the dollar at support. You've got the 10 years at support, the 30-year at support, you got the VIX at support, and you've got each of the major indices right below resistance. It seems to me like the likely short-term move is going to be lower. Maybe we got another week moving up, but I do think we're going to move lower, hence why I put that NVIDIA collar on. All right, what else do I like in here? Let's go look at Market MRI Pro. And so you already saw a lot of the functionality in Market MRI Pro. The timing model is built in both daily and weekly, and it will update during the day so you can see changes. It takes a few seconds to load here, and you can always refresh it if you don't think it's refreshed. I have, similar to what I have in TradeStation, on the major ETFs and indexes. And I've got some extra goodies here. I got on balance volume, the high jump, which is my extension indicator. Still working on this. The trend line feature's coming, but it won't be automatic, unfortunately, right now. The commodities, we have to build in the 10-year and the 30-year, but we've got the TLT and the IEF, and they both went up again, which is interesting. You'd expect bonds to have fallen with a strong economy and strong inflation. So it's weird things this week. The daily briefing is, again, what I'm looking at all day long. And once you're in a real-time market, you just hit the refresh, and it's almost instantaneous. These pieces here have a lot of calculations, so it'll take a few minutes. They don't change frequently. The buckets are real-time, and again, you hit refresh during the day if you want to update them. Since I'm not looking at buckets and I'm not looking at the timing brief every minute, it didn't make sense to stream it and use up your bandwidth and the data. Market breadth is something that duplicates a lot of what Sagar's tool does on the NYSE and the NASDAQ. It's done automatically for you. It has the stocks above the 20, 50, and 200. Down here, it's got new high, new lows, AD lines. up-down volume, and down here it's got those Ian Woodward indicators, Eureka's, Phoenix, Hindenburg omens. It's got bingos, bangos, and it has something that Praveen invented called the defib. And when do you shock somebody? About when they're dead. And when they fire on the market, it typically is a major reversal time. It's sort of the bullish equivalent of the Hindenburg that we'll do some teaching about. And then something that I really love in wealth charts is the ratio chart. So we built in, right now I've only got it set at hourly, so it's shorter term, but for a swing trader like me, it was the right time frame. Daily is interesting, especially if you're looking at longer term trends. But what you have here, this is Bitcoin versus the spider ratio. The rest are the sectors, and I look for things in the upper right-hand corner. So you can see communication super strong. Financials weakened a little bit. Technology is coming up. Really, it was Apple and it was NVIDIA really leading the charge on Friday. We saw some improvement in staples, utilities, and real estate, but they weakened as the week went on, especially Friday, as did healthcare. But looking for things up at the upper right-hand corner says the things that have been moving for a while. Looking at the long red line is short-term down, the long white line is short-term up. So I'm going to come back to how I ferret out stocks in a minute. We jump back into wealth charts. And yeah, I know I'm going to be jumping around. That was sort of my intent. In wealth charts, really done a great job with scanners. I have to give Rob Hoffman all those kudos. Great trader and a great developer. So let's take a look at the S&P 500 heat map. So a very mixed day. So it wasn't Friday that Tesla was so good. Friday was kind of a nothing burger day. But you could see it was Wednesday and Thursday where Tesla had a big move. But Tesla is, when I look at Tesla, and I'm not a Teslonian, I've had a Tesla, and right now I've got two EVs. I have an i7, and I just bought the new Cadillac Escalade IQ, which is awesome, 460 miles of range. And my wife has a hybrid, and I think at the end of the day, the hybrids make more sense because you're not beholden to where you find a charging station. But for my type of driving, it was fine. Tesla's pulled back hard. It's sort of, to me, I'd like to see it take out this trend line, which will follow way down as it goes further before I get too excited about Tesla. NVIDIA still has some overhead supply here. I would love to see it get up to 150. I don't know if it will. I think the market's getting heavy. But NVIDIA has had a nice run off the bottom. In fact, let's get the measuring tool. And if we start here, and we run it up to the high here or thereabouts, it says 23%, and that is in 8 bars from 115 to 140. That's been a hell of a move. I bet it shook out a lot of people. Just a lot of us have such long-term gains in it, you don't want to leave it. Meta, wow. Wow. I think even those red candles for the most part were up days. It just doesn't go down. Wow. Apple, big breakout on Friday. If you go to the most previous high, that was a big breakout. I actually entered some more, added to my position. Microsoft, kind of looks like Tesla way down in the pattern. Amazon, earnings were not great. But it's pulled back to the 50 and kind of a steep pullback for a flag. But, a breakout above that position there, like it did here, that might be intriguing. What a great place to bounce if the market's strong. If you just look at their earnings, they beat, but they did what they often do is they warn going forward. And they do this all the time. Netflix, wowzer. That's all I can say. Google, not as bad perhaps as Tesla, but Google's pulled back some, and that was after earnings as well when they actually missed the whisper numbers and the forward numbers. I like to look at those Mag 7 or 8 stocks always as I do my analysis, just to give me a sense of what's working now. One that was a surprise was Palo Alto. Earnings were not great. They beat by 3 cents, but they missed whispers, and their projected earnings were not great. And look at this, it was a kind of a belt hole candle where it pulled all the way down and closed much higher. Much higher than where it opened. Had a good day the prior day going into earnings. Thought that was kind of interesting as well. One of the other things that's really great in wealth charts, again, I mentioned, is the scanners. If I go back into that scanner piece and I look at Wealth Scanner and I look at the bullish sort, this has me worried. I've done this now for 3 years using this tool. And in a good market, you have a bunch of things over 800, and they're typically growth related. The red numbers are projected seasonality over the next few weeks. Everything's got negative seasonality, and the only things that are above 800 are China, cybersecurity, and e-commerce. Everything else starts to fall off. That worries me a bit. We'll leave it at that. Now, the scanner in wealth charts, like I said, is end of day, but it's a great scanner. And I built scans so I can look for pullbacks in an uptrend, which is what I like to buy, and look for them to have momentum signals coming in, maybe in a squeeze, maybe not. So if I rank it by 4, by the top, some great looking charts come up. Air lease. Look at this candle on Friday. You're going to see, you know what, let me just do this because it doesn't seem like it's updating the way I want it to update. It's updating fine on price, but my indicators are not popping up. So I usually get around that by just resetting it once. Let's go back to the scanners. And so air lease. There you go. You could see I had a massive beat, a 78% beat. Gap, big volume, breakout momentum coming out of a squeeze. This is my high-low. This is a objective measurement of extension, less than 95. I'm usually okay. 46, it's not extended. This is relative strength turning up and OBV. This one looks really good to me, and my target would probably be up in the 52, 53 range for the first tranche, and then let it run. BFAM, Bright Family Horizons. Don't know anything about what they do, but they had earnings come out, 7% beat, not extended, great relative strength and OBV. Now you have to be careful with these things, and let's go back to Air Lease for my be careful speech. And my be careful speech is this. If I was buying it down here, and I'm just waiting to get it back up to here, I might have been tempted to sell some. So what you have to ask yourself is what's going to happen next? Will we see, just go up to the moon and back? It could. Or is it likely to do this? Form a little bit of a flag and then break up. And this is my favorite kind of buy right here. Or is it going to do this and break down, which I doubt it with those earnings. So high, medium, and low road scenario. I'm going to take the medium, and rather than chase it at the open on Monday, what I might do is I might put a buy stop up here. Why? Because if it's going to fail at the open, I'm not going to get taken out. And then look for it to form a flag and buy the breakout of the flag. You'll see so many of my charts have the line written on it, because that's where I like to take my buys. CAE, aircraft supplier, also had earnings, I guess on Thursday, beat, big breakout. Now this one, even more concerning because it's at 100% on the high-low jump. And the high-low jump is measuring the close to the 50, the 200, and the 17, coming up with a mathematical equation, and then saying, looking at the highest extension that this thing has had over its current last year, at 100 says it's the most extended it's been. Goodyear tire is way below the moving average, the 200 still, P-Core, this was another one that looked great. And this one I like, it took out that high. So look at, and I don't own this one, so I'm not going to tell you that, but you got prior high, and yes, there are auto trend lines on wealth charts, but there's just so many of them. You broke out of the trend line there. I think this one looks very interesting. High jump 82, relative strength at OBV looks good. All of these, I'd rather they come in a little bit. You may not get that. And then Win, we'll look at Win very quickly. Win, now the problem with Win, it's in a downtrend. But at some point, downtrends are going to end. So where I might put that up here. Oh, why'd you do that? Let me take that out. Try that again. Oh, come on. Oh, all right, so let me just kill that. Put another one in. Yes, drawing is not my strength. I'd like to see it take that line out, sort of reverse the trend. And right now, you still have lower lows and not higher highs. But that one has turned up. It had the 4 dots. That means the earnings were probably good. 90% beat. That's pretty good. Relative strength OBV. I like Win here. I'd rather see it move up a little bit and buy it a little bit higher. TSS Inc. is an IPO. Beautiful lower left, upper right. Here's your pullback here. And another breakout, 3 dots. Volume breakout momentum from a squeeze. Relative strength at OBV look good. And gosh, I'm so glad I own AT&T. Why? Well, because it's moved up since I bought it. When I bought it, it had a 6% dividend because it was closer to the $16 range. Now the dividend is closer to 4%, which is still a pretty good dividend. And it's breaking out of this constellation of old highs. Earnings, I believe, are out, but I'd have to go check. Those earnings are from. Oh, this is actually. I'm sorry. This is a tour, not AT&T. AT&T Telephone is just a T. I don't know if this one doesn't pay a dividend. This is a nice growth stock with a breakout from the base. I like this one as well. So all I did was I loaded a list that I call my combo leaders. I could have put in all stocks, but I pre-filter this for some stronger fundamental stocks. And then I rank them, and then I just take a look down the list to see what it is that I like. That's how I do it in wealth charts. TradeStation, oh man, TradeStation, there's things about this that I love. The challenge that I've had with TradeStation is that radar screen up here, and this is a real-time scanner here. If I go much above 300 instruments, I'll get blue screens of death from TradeStation all day long. So I've learned to be careful. But I'm able to monitor in this radar screen, and you have to have Sagar's tools to do this as well, Sagar's trading signals and my dots, relative strength versus the spider, and IBD-like relative strength. And this is about buyable gap ups, but what it really is, it allows me to see who's got, by the moment, who's got the big volume moving into the stock. And there was a lot of big movers on Friday, as you could see down here. We built my tools, my signals, Sagar signals, super smart programmer Van built me something that's very different. And I'll show you the base story right here. I pick my list, I hit start, and it scans. It's an end of day scan. So again, I'm limited to end of day. The radar is real time. But it's going to scan, as you can see, 500 charts in a relatively quick time. It's up to 200. And then it's going to assign values that I'm looking for, kind of like in radar screen, to the stocks in the S&P 500. And then I can filter, instead of rescanning, I'll show you what I do over here. So I've looked at combining Sagar stuff down here, my stuff and Sagar's, so I've built filters. So one thing I might want to look for are Pullbacks in an uptrend that break out with Q. And that's going to take 2,500 down to just a small number. Here is air lease, which we talked about. Now, again, the benefit here is I've got Sagar's trend lines. But let me show you a secret weapon. And all the thanks for the secret weapon go out to Chris Wilson, a fellow HGSI guy who lived, I believe, or lives in Alabama. One day, Chris showed me that he put on his charts, on a weekly chart, he did a ratio chart of the instrument we're looking at versus the S&P 500. He put a moving average, and it seemed that every big run coincided with a break down below the moving average or break above. So I built that into my scan. So here you have air lease. It has a gap, volume, breakout momentum, out of a squeeze, relative strength, and OBV look good. And here's that high jump. Looks great. So I could go down the list, a couple that I'd like to point out to you. Here's Win again, and notice Win has still got an older trend line above. It's got one on the weekly, and that tempered my enthusiasm a bit. EQH, Equitable Holdings, this one looked great. And let's look at it in 3 time frames. Give it a second there. And so you could see the monthly it's a powerful stock. The weekly is powerful, and we just got a pullback in a major uptrend in a breakout from resistance, and look at the relative strength turned up, and it's not extended. So EQH. So what I've done here is I put the things that I like, finding stocks in an uptrend that have pulled back, and then have those signals. BSY. I didn't like this because of the resistance overhead. Let's see. Massimo looked interesting. Let's take a look at it. I've got the triple chart here, so let's just take a look. You know, junky, pretty good on a weekly, pullback, breaking out. And here you got uptrend into a wedge and broke out of the wedge. Not bad. So let the scanners do the work for you. Paramount is a cheap stock. And I bet when I look at the various time frames, it's boring. Big pull-off, big pullback, and it's breaking out. Is this something? It's a low relative strength stock. Earnings are not to April 28th. Not a big growth stock, but it made my scan. Here's that Procore Technologies that we talked about. I showed you in wealth charts. Oh, I blew it. Let me easily fix. And you could see this, I believe, is an IPO. And monthly good, weekly good. Here's your pullback. Here's your pullback on the daily and a breakout of resistance. Not extended. Look at this break on the relative strength. So I'm looking for a similar pattern. Now, I'm not showing you the big names, okay? Sure, I could come in and say the best stock in the market right now is APP. And it is. But I don't know how I could tell you this and go buy it here. It's at 100% on the high-low jump. It's probably going to go higher. It's done this before. I've been in and out of this stock. Unfortunately, I'm not in right now. And I don't think it would be good of me to be pointing that out as the stock to be looking at on Monday. Maybe it is. I'm looking for higher probabilities, lower risk. And after a move like that, I get nervous. Here's another one we talked about before, TSSI. And again, if I look at it, I think there's another IPO. Boom. Weekly looks good, and there's your little bit of a pullback on the daily and breaking out here from a trend line from a wedge. So I really like the ability with this trading app to scan once, and now let's filter shorts. I don't have to rescan anything. I just pull up my retracements in a downtrend with a breakdown, and these will be potential shorts. Now, hard to short at all-time highs, but maybe it's better to be looking at some individual stocks. I don't know what happened with eggs. They're still expensive. But look at Calmaine, a breakdown of support there, breakdown here. This thing could fall all the way to 80 bucks from 95, another 20%. Not saying I'm shorting it. FTI, FCN Consulting in the energy space, bouncing on support until it stopped on both the daily and the weekly. GoDaddy, I never understood this, why it was doing so well. A big breakdown on earnings. Motorola, getting close to support here. HCC, a coal stock, breaking through, running down here, probably a shortable stock. And notice we got the equivalence of the bullish signals, but in red. So I use TradeStation to scan, and I scan it against a really big list. Lastly, a few comments in Market MRI Pro as we just hit the hour mark. So we've already done the analysis, and I'm a top-down guy, and that's why I looked at the ratio charts. That's why I look at Wealth Scanner in the wealth charts. But here I built it in, and I think I built it, my programmer Praveen built it to my specs, and to me it's as good as anything in the market. Here are the 11 sectors in the market. I've used the markets defined by, in this case, the JAS list, which is the NASDAQ plus the NYSE, filtered for $1 and 100,000 shares. I've asked Praveen to rerun that list because things come in and out over time, and I like to keep it updated. It shows me here on Friday the leader by percentage was communications. If I click on that, I can see the 163 stocks in communication. If I look at by performance, the leadership is ZH, Chinese play, Roku on earnings. How do I know it's earnings? Well, I could come up here and I could see earnings came out 213. It was up 307%. It was on earnings up 13% on revenue. Just checking something here. Yep. We are in the process of making sure it's quarter versus the prior year, same quarter. Can't tell if that's been changed here or not. But you can get the fundamentals and when the last earnings date is at your fingertips. K36KR, I don't like this pattern. NBIS. So you can go down and pick tennis music. This is one that's been in a nice run. It has been one that I've owned in the past and have not always done very well with it, to be honest. And so I always remember that. Unfortunately, I have bad memory, so it probably keeps me out of some strong stocks. I could look at it that way, or I could look at this FM2, for example, as a short-term momentum and what comes to the top. Roku, which was an earnings play, Netflix, amazing. This white thing here, which I can move anywhere I want, is shows me that the relative strength is 95%. DoorDash, super powerful. So I could go down the list and see what's leading. I could look at consumer cyclicals, of which there's 380 come up, do the same analysis. Or I could just go here and let's just go short-term momentum and let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And now I've got 203 stocks that come from the 10 leading industry groups. And I can do several things with these. I could look at best performance and just rank them by percentage change. Hyzon, I think, is a EV, Chinese EV. I will tell you one thing about the Chinese EVs. We don't know what we're missing in the U.S. I was in Uzbekistan, of all places, and they are on the Silk Belt Road, whatever you call it, big trading partners of China. And you have a bunch of obscure name Chinese EVs driving around. This one's cheapy stock I'm not going to worry about. Some of them, like the BYD, are amazing. DraftKings, big breakout here. So I could start to go through my list. Airbnb had great earnings, a big gap up there. When? Where did we see that before? Again, is it something to be going for? I'd like to see it take that out. I mean, I'm pretty consistent. I don't want to get in too early in something that fails. MLCO is a casino in Macau. So I can go through the list there. I could have ranked them by two-day support or two-day momentum. And then I'm going to go into a larger list and show you another way of sorting. Airbnb, Mealy, you got to buy this thing on pullbacks because it gives you some great opportunities. But boy, it's $500 off its lows. This one, Flutter, is another gambling stock that took out prior highs. Again, there's 10 different industries. Here's bookings. So that's another way of doing it. That's all called top-down. Rank stocks by the best sectors and the best industry groups and have not just the market win behind your back, but have the sector and industry. Lastly, I can do a bottoms-up review. And, when we started building this tool, I thought we were building it for me. And it became such a great tool. And this sounds like such a made-up thing, but we decided to take it to the market. So there are certain pre-filled scans that I like. And one of my favorite scans would be, I want stocks above the 200, volume at least 500,000 shares, and price at least 5. And I'll hit OK. And that brings my 3,500 stocks down to 1028. That's the pool I'm going to swim in. And then I'm going to look at a couple of my signals. How about two-day momentum up? Here's your AL. We've looked at this several times today. BAM, Brookfield Asset Management. I think there was something, did I write something here? Pays a 3.2% dividend. And you'll notice down here these two blue dots. Those are my momentum dots. I have convinced myself that these are unusual occurrences to see two in a row, and typically it precedes a significant move. Etsy had it. Now, Etsy broke above the 200. It's got earnings coming this week. How do I know? I hit this. It tells me earnings are the 19th. I don't have to hit it. I can just hover over it, and I don't have to turn it off. Jinx is a beaten-up solar stock. Rivian, another EV maker. Beautiful, beautiful trucks and SUVs. I looked at one before I bought the Escalade. I just wanted something now. I didn't want to wait. Reliance RS, Reliance Steel, that's an interesting thing to see breaking out. They don't have good patterns, or I'll tell you about them. Sixth Street Specialty Lendings, TSLX, looks interesting here. So I'm curious when I see this, does it pay a dividend? It doesn't pay a dividend. That's interesting. It makes money, surprise, and beat it. Big surprise on revenue. That's an interesting breakout. Don't know anything about the company. And VNT, is one that looked good here as well, breaking out above the 200. But these are all because of the double dots. Now, for a couple of days, I kept talking about Ventas with the same basic pattern back here. And boy, look what it did. It just had a big breakout. Would have been a nice one. So I have a number of built-in scans here. Another one that I like is called my multi-time frame CPR buy. Requires alignment of the daily and the weekly. And you can see there's a lot of stocks here, including one of the ones we looked at before, EQT, which looks like it's getting ready. Another one of my buy-sell signals that I have in here is a very quick one called the EMS cross up. And you're going to see down here that there'll be let me pull one up. Didn't love this one, maybe I should. But you notice it went from a red dot to nothing. If it's confirmed tomorrow, you'll have a green line. It'll be a new uptrend. So top down, look at markets, industry, sectors, industries, leading stocks. Bottoms up, take a big list and test your scans. All these platforms enable me to do what my main goal is. And my main goal, believe it or not, is not to make money. My main goal is to make money while having more time for what matters. That's why scanners are important. I've been doing these videos since 2003. I love to do them. It forces me to follow a system. That system has not changed. My way of trading has not changed since I started. A little bit tweaks, especially on the options perhaps. What has changed is the tools have gotten better to make it easier. Have an awesome, awesome week in the market. For those of you who are off on Monday, lucky you. I get to go fly up to Pittsburgh and free my tuchus off because it looks like it's going to be like 15 degrees. But you got to do what you got to do for your job. So have an awesome, awesome, awesome week. Thanks, everybody.